Hello and a warm welcome to the Open Treasury podcast, your go-to source for the latest news and analysis in corporate cash and treasury management. This show is brought to you by CTMfile.com and the Treasury News Network, where treasury professionals learn and share the information that matters most. I am your host, Pushpendra Mehta, Executive Writer at CTMfile. We are delighted to welcome back Jack Large, Editor of CTMfile, and Craig Jeffery, Managing Partner and Strategic Treasurer, for today's episode. This week, we will be discussing four themes, namely Chinese banks' liquidity reporting, crypto exchanges and proof of reserves, cross-border payments collaboration, and finally, Treasury Management Super App. Listeners of this podcast can read these articles and also review a variety of Treasury content by visiting CTMfile.com or by following the links in our show notes. Let's begin our conversation with the news about Chinese regulators asking banks to report and their ability to meet short-term obligations after a rapid sell-off in bonds triggered a flood of investors' withdrawals from fixed income products, as has been reported by Reuters. Craig, if I may direct this question to you first, is this move by the Chinese regulators to ask banks to report liquidity after a sudden bond slump reassuring for corporate treasurers?
Yeah, Push. It may be sudden. Whether it's reassuring or not, I think that is certainly one of the intents that they have with that. Given what's gone on with property prices over time. We've spoken on the Open Treasury podcast about this, in the summer and prior to the summer about what's going on with housing, building, property markets. It's been significant. There's a number of items that are creating quite a bit of turmoil within China, but also globally. I mean, as we look at the expectations for a global retraction in the economy in 2023, this is certainly not unexpected. And so, part of this is to ensure that there's liquidity to provide some of that oversight, but also to assure the markets, as I said at the beginning.
This is just a typical example of how banks have to react when you get slumps in this case, the property market. And also it's influenced by the geopolitical situation, which makes this a lot worse because there might be a domino effect across other areas and so on. So I'm not surprised and just hope we get a better 2023 than we are thinking.
Moving forward, as crypto faces a crisis of confidence, crypto exchanges like Binance are publishing proof of reserves to potentially restore faith in cryptocurrency amidst the FTX meltdown. The proof of reserves reportedly aim to increase transparency, demonstrating that an exchange has adequate liquidity to process all customer withdrawals. Jack, if you were a corporate treasurer, would you find some comfort with these published proof of reserves? And do you think it will become the new industry standard to prove solvency?
Well, the problem is I wouldn't go into this type of investment. I just don't think it's stable enough for any corporate treasurer of any scale to get into. But once you're in this dynamic, changing value market, it's not surprising that you're starting to get traditional things like proof of reserves coming to the fore and the need for that. But it doesn't overcome the fact that cryptos are currently unstable and unusable if you're a corporate treasurer of any scale.
You think about the volatility of cryptocurrencies, particularly ones that are not bound to any particular, government-backed security. They're extremely volatile. I mean, the prices of these jump so significantly by themselves, and that's assuming stable exchanges and no malfeasance, no loss of assets. And so the situation that we've had with the collapse of FTX, for those that are in that market, in that space, or those that may have to deal with cryptocurrency, now you've got the double whammy of highly volatile asset with highly or potential highly insecure platforms here, or exchanges, and this is not good. That's not good for stability by any stretch of the imagination. So, in terms of Binance looking at proof of reserve as a way to shore up some confidence, to provide some additional measure, that makes sense. I know Jack has talked in the past about cryptocurrencies and banking moving more towards a more mature banking environment. I'm not sure how you said that, Jack, at another time, but the idea is they need to step up and provide security in the trading space. If you have regular volatility, you may be comfortable with that, but the loss at an exchange level is probably too much for too many.
Our next story for today revolves around US-based Payments 20, a leading voice of the global payments industry that has called for collaborative action within the industry to improve the efficiency and accessibility of cross-border payments in a newly published report titled Toward Borderless Payments. Craig, among the recommendations provided in the report to help the industry move towards borderless payments, which are the ones that you find most useful from a treasury perspective?
The statements and the recommendations that they have that always make the most sense, I think, are impossible to argue against. Maybe more of a challenge to implement, but the ones that make the most sense are the using ISO 20022 as a standard. This has long been coming. It really is the standard in many, many ways. Certainly in the corporate world, it's moving there. More companies are using that as they add payment capabilities. They're adding ISO 20022. When they do it for information reporting, they're adding connectivity in that regard. So that's certainly one. And that also leads to the efficiency aspect. So efficiency, cost, commonality leads towards more visibility. So all of those are the common feel good type statements that make sense. I don't think anybody would argue against any of those.
I find this an impressive wish list of things to do. But the big missing piece is how we do it. I don't think this is a serious piece of research.
The fourth story for today is about the US software company Finzly that has launched a treasury management super app that it says can manage accounts, payments, and global treasury needs of business customers. Jack, what do you think of this super app that is positioned as an alternative to a conventional one-size-fits-all business banking platform?
This is, I'm afraid, another dream solution. The ultimate solution is a super app with covering all sorts of banks, but it's at the moment, Finzly OS is limited just to the US banks. Doing it across multiple countries, I don't think is possible yet. For small businesses, just automating that will in the long run be very useful. If I was an American small business, I would certainly be interested in this. But if you're a multi-country user, then I think I doubt how useful it will be.
You know, on this article, what Finzly's doing with this super app, this app of apps, if you will. These super apps are certainly being talked about by banks, how you combine, make an app more useful, more functional across the board. That's, there's certainly a lot of attention there. But when we think about small, medium-sized businesses to commercial to corporates or large corporates, I think Jack's right, particularly be skeptical on the larger size. When we think about, super apps, it seems to me that this would be quite useful for the smaller business who is dealing with lots of different systems, but in no way can spend on the treasury management systems of today. They're too small. But as you move upscale, as you get larger, they're able to afford treasury systems, risk platforms, to build those out and to have broader functionality without necessarily having a separate and distinct super app. I think that the point on the larger end of the market is super apps, if they will take off in the, let's just call it the business space, it most certainly will come from the lower end of the market and move up from functionality because they don't have something that really addresses this now, and this allows them to expand. And so that seems inevitable that it would have to take that route. On the larger end of the market, you have a number of established players, plus you have a bunch of the API first players, which is a way of performing super app type functions, right? It's doing it through APIs. It's giving people the portal into their portals. So a portal of portals is a super app in that parallel universe of, let's say, websites and systems versus, an app. And I think we always think of apps on our phones. It doesn't have to be that way. So I think those are the two sides, the API first and the super apps, maybe addressing the market in different places.
Finally, I would like to end this conversation by seeking your opinion on your choice for the biggest or most important theme of the past week and why. Craig, if I may start with you.
Well, I'm going to pull a Jack and go with a theme. The theme is confidence and comfort. The article about China working with the banks to ensure they have liquidity after the bond slump, which came after the real estate slump, is an area of an intent to shore up confidence. Binance with the proof of reserve certificate on the crypto exchanges is another form of confidence and comfort. These are both related to visibility, both related to some measure of comfort, and some providing liquidity and transparency into that. So that's the theme for this week. I would also think that this moves forward into 2023. If we look at the upcoming slowdown, the global slowdown, contraction, recession globally, we're going to see these elements of comfort come to the fore, which is what we always see during slumps, that we see that happening. So I think this is a precursor to what we'll see in 2023.
Interesting. Jack, what are your thoughts?
I agree that the theme is searching for stability, both in a system sense, but also in a banking and funds sense. And this is going to get worse or more difficult in 2023. But the searching for greater simplicity and greater security is with us for a long time, but may well get worse in 2023.
Simplicity, security, comfort, and transparency. Those are interesting themes. Thank you, Jack and Craig, for your valuable insights. We would also like to thank our CTMfile audience for joining us on this edition of Open Treasury. Please subscribe and look in the show notes for the article links. Thank you. This podcast is provided for information purposes only, and statements made by CTMfile or guests on this podcast are not intended as legal, business, or consulting advice. For more information, visit ctmfile.com.